about workers' compensation, and workers' compensation is basically defined as a system where an employer must pay or provide insurance to pay the lost wages, medical expenses of an employee or medical expenses of an employee who's injured on the job. This is mostly a trade-off between the employee will pay for all this, and with the workers' compensation, the employee cannot sue the employer. So it takes a lot of civil litigation out of the courts. Today I'm going to talk about the history of workers' compensation, what constitutes a claim for workers' compensation, how the claims process works once you do file a claim, and workers' compensation in the construction industry. The general history is the first modern workers' compensation laws came out of Germany, and actually in 1838, they actually protected railroad employees and passengers in the event of accidents. Future changes were enacted on this law, and Chancellor von Bismarck of Germany actually in 1881 passed the Voluntary Insurance Act, which failed in actual operation, but it introduced a compulsory plan, which was enacted in stages, finalized in 1884 as the model for our current system, where if an employee does get injured on a job, then they're able to go through their employer to get insurance to pay for their medical bills and lost work. In England in 1887, they kind of expanded on this. The act was an act of Parliament, and it replaced an act that put the employer at liability. Basically, what this English act did was it took the burden of proof off the employee and put it on the employer to prove that they were negligent, it took the burden of proof off the employee. All the employee had to do now after this act was prove they were on the job when they were working and they got hurt. In New York and Maryland, before 1911, they tried to enact multiple workers' compensation laws, and they all failed because of the fact that it took out litigation. They felt that it was unconstitutional because it limited due process of the law. In Wisconsin in 1911, the first workers' compensation act was enacted, and actually in Wisconsin, it guaranteed injury compensation as a legal right for all workers, which is pretty revolutionary. In Florida back in the day, there wasn't a lot of manufacturing, or really, it was all farmland and sugar cane and cattle ranching. In the 1930s, during the Great Depression, since it hit all the agriculture so hard, Florida wanted to bring businesses to settle in Florida, but they didn't have a workers' compensation law. So in 1935, Florida enacted laws in order to attract, and they enacted workers' compensation laws in order to attract big businesses to come down to Florida to actually go and start manufacturing. In 1978, there was a large overhaul, which is basically what we have now. Before 1978, we had a fixed benefit system where you had an injury and you basically just got a fixed benefit whether you could work or not, and depending on how bad it was, that's all you got. And in 1978, they changed it, and now it's instead of having a lump sum like before, if you couldn't get say you were injured and you could not return to work, you just got a lump sum from your company, and they say good luck to you. Now, basically, it's a wage loss concept, so they look at your wages, what you've earned, what you've made in the last year or so, and they give you a certain percentage of that to help you get through while you're injured. And that lasts until you make it back, until you're uninjured and back on the job. So that's what we have now. And there have been like certain acts and stuff in the state legislature to cut down on fraud and everything in the recent years. The employer has certain responsibilities for providing, like, just in general stuff for employees. They have the responsibility they have a legal obligation to provide a safe working environment. So that means that there can't be anything that, like, really is, we must have insurance to provide compensation to workers that are injured on the job if there are 4 or more employees in the company. So if you just have a small company with few employees, you don't really need the insurance, but it is required by law once you have more than 4 employees, even if it is just like desk work or something. If someone is injured on the job, then they are required to have it. In construction, all companies are required to have workers' compensation, to have workers' compensation insurance, even if it is just a one-person company, just a one-person acting as a subcontractor, they're required to have insurance for workers' compensation. They also have the duty to notify the insurance company once the injured employee is back to work, so they can stop receipts, so they can stop giving out their payments. If not, then that just becomes fraud. It becomes a huge mess. All right, now what constitutes a claim? There are 4 things that constitute a claim that must be met in order to have a valid claim. First of all, the employee must have a physical injury. That means that they were hurt on the job and they are actually hurt. Second, the injury arose because of their employment. If they weren't employed then if they were not employed at the time, if they were not doing the job, would they have actually been hurt? And a lot of times, claims will be, people will try to file a claim where they were doing stuff outside of what they should have been doing, and they will have it shot down because of fraud, but because it was not in the scope of it wasn't because of what they were actually supposed to be doing for their job. The injury was sustained within the course of their employment, so that's basically a time and place thing. The course of their employment, the scope of their employment, of course. So if they were at the job at a certain time when it happened, if they were doing what they're supposed to be doing, that's how. If they were doing what they're supposed to be doing and they got injured while they were doing it, they have a substance for a valid claim. And then the employee has to give the employer notice of the injury. So the employee can't just say he was hurt and then not tell the employer and then run off. It's the employee's job to make sure that the employer is notified. There are certain injuries that are not covered. Mostly the injuries that are covered are physical. So mental stress, mental injury that is caused by fright, stress, or excitement is not. Pain and suffering is also not covered under it. Pain and suffering not being physical pain or suffering, but also mental stress from being frightened, stressed, or excited. If the injury is willfully self-inflicted, that's fraud. If someone hurt themselves on the job trying to get a workers' comp claim, that won't work. And if the employee was under the influence of drugs and alcohol at the time of the injury, it's a big deal when you get drug tested for a job. If you do come up positive, it can disqualify you from workers' compensation benefits in the case that you were hurt on the job. How the claim process works. It is the employee's responsibility to report their injury to the employer within 30 days. So if you get injured and say you report it at 31 days, your claim probably will be denied. The employer then has 7 days to report the injury to the insurance company, so to their insurance provider. For workers' compensation, the insurance is a private company, and each employer individually buys insurance for workers' compensation in different companies, but this insurance company, once they get notice of the injury, will send a brochure to the injured employee with the rights and responsibilities, what they need to do, and this happens within 3 days. Once that happens, the medical provider will be provided by the insurance company. It will be authorized by the insurance company, and they will just provide all the necessary medical bills, medical care, and prescriptions. And the injured employee also with workers' compensation doesn't have to pay anything out of pocket. If they have medical insurance and all that, it's all covered by the company's insurance. All the co-pays, premiums, all that stuff will be billed directly to the insurance company. If the employee is injured, like if they're injured severely enough to where they have to miss work, they'll be reimbursed for that after the first 7 days. So they won't, for the first week of work that they miss, they will not be reimbursed, but after that, they will be. The rate they're reimbursed is that they're reimbursed 2/3 of the weeks of their weekly wages. So they look back at the last year of what they made, they multiply it by 2/3, and that's what you get every 2 weeks, is a portion of that. The one good thing about that money is that it's not subject to income tax, since you are not actually earning it. It's a benefit for being injured. And then checks will be mailed within 21 days of reporting the injury to the employer. And then also on another note, if the injured employee has missed work for more than 21 days, it is possible that some insurance companies will go back and pay that first 7 days for them, just to help them get back on their feet. If an employer refuses to report the injury to the insurance company, sometimes that happens, the employee does have the right to go directly to the insurance company for information on health and how you to file a claim. There's a toll-free number in the state of Florida that helps you do that. It's 800-342-1741. And if you go on any job site, any place that you can work at in the state of Florida, they'll have a big poster talking about workers' compensation, just like the first one I had with the lady with the broken arm. They're all over the place. And that'll tell you all about how to file a claim. The construction industry. Workers' compensation is pretty big because so many people do get injured, and it is such a dangerous job for the laborers. We do have one of the highest injury rates in any industry. I think other ones are commercial diving, oil rigs, all that kind of stuff, but we're right up there with them. Injuries are caused by most of the time injuries are caused by work conditions, lack of training, and proper use of safety equipment. So any of those things can and will most of the time result in injury. Who is liable for injuries on a construction site? Many parties can be responsible, such as the site owner, because they own the site. General contractors, subcontractors, engineering professionals, if they okayed a certain